Hello traders, this is Dimitrios Haralampidis from Snail Trading, and in this video I'm gonna present you my views on the S&P 500. Looking at the weekly chart, last week's price action created a fairly large bullish candle here, which tested the lower boundaries of this multi-year channel, which has been broken here, and it was testing twice here. Again, prices were rejected at the lower boundaries of the channel and the 144 period SMA, which appears to be at approximately the same level. This is a positive sign on the one hand for our bearish scenario, because as long as prices are rejected by this channel, the chances that they will reverse lower in an impulse to the downside are higher. On the other hand, we see with the divergence between those two lows and the 14-week RSI, and that may suggest, and also the 14-week RSI is about to make a bullish cross with its 9-period RSI, with its 9-period SMA. But we need more price data, of course, and probably next week we will have a better view on what really is going on. Looking at the daily chart, we see exactly the opposite signal. There is of course, again, if we look at it like this, there is divergence between those lows and the lows on the RSI, that's true, but there is also divergence between these highs here. So at the current point, the mid-term momentum of the index remains unclear, and prices are still well above the 21-period SMA. And those large moves that the index has made lately makes it very difficult to understand the current state of the momentum from the RSI or from the moving averages, because it creates so large gaps between the SMAs and very choppy RSI. There is another view here that suggests that this trend line here was finally broken here, and thus we are heading to much lower levels from here, to much higher levels from here. But that is something that again has to be confirmed. Nevertheless, it is possible that we have a completed correction at current levels, and that would be ABC for a wave W here, ABC for a wave X, and something like ABC for a wave Y down here that completes a wave 4, and thus we're heading to higher levels from here. No matter what is the correct count, however, for the longer term, in the 4-hour chart we see that this move from the lows here was impulsive. It looks impulsive. I'm gonna move directly to the 1-hour chart. Just I would like to mention here that the last attempt to move lower was rejected by this by the 21 period SMA on the 4-hour chart, but I will move directly to the 1-hour chart because here we can see more clearly the price action of the recent rebound. While there are of course alternatives, and there are always alternatives when the bounces are so sharp, because every single correction of those little red candles that we see here may be some kind of wave 4, and therefore this could be 1, 2, 3, 4 and 5 complete wave A here, B, and another 5 wave move to the upside, complete wave C up here, and thus the whole correction would be completed here. But I highly doubt it because to the degree that I am expecting that correction, I expect that to be a wave 2 of somehow large degree, large degree. So I strongly doubt that it has ended in such a short period of time. Therefore, I believe that this is a 5-wave move to the upside already completed. Although as long as prices trade above this high here at 1900, the drop here didn't manage to touch this high here, and thus this correction here can be wave 4 and another wave to the upside for wave 5 to complete this wave A. On the other hand, I believe that this move here counts well like a 5-wave move, and therefore we're looking lower from here. We have a 5-wave move until here. If we look at the smaller time frames, a correction up here, and another 5 move to until this low here. So I believe that this correction that pushes a little higher will end before exceeding this level here, which is at the 1926 and 30.30. I believe that correction will end somewhere here and prices will continue to the downside. Now the point is that this level here, the 1940-1950 level is a super strong and a super important resistance level for the longer term outlook of the index. Therefore, since wave A has almost reached this level, the correction to the downside has to be very deep in order to the whole wave 2 that we expect to qualify as a flat. Because if the correction does not retrace much of this rebound, and let's say it retraces 50% around this level, then this correction will have to be a zigzag. And if it is a zigzag, it will have to move beyond the 1950 level, which will create significant problems with the longer term outlook of the pair. So I believe that in the coming sessions we will see a corrective decline, but a very deep one, and then another rally around those levels again in the coming weeks. That pretty much sums up everything for my analysis on the S&P 500, and I'm expecting lower prices, but I need prices to move below the 1900 level to confirm this at least temporary bearish reversal. And even in the shorter term, I need prices to remain below the 1925-26 level for this decline to be the first waves of this corrective move that I'm expecting. Thank you very much for watching, and see you next week.